Hello dear viewers, my name is Rakesh and I'm your host here with the webinar topic EURUSD and GBP USD technical analysis today, that is 2nd of August 2021. I am a USDCAD community member, and just to be clear that I am not an employee of USDCAD. All the views or opinions or the trading ideas that we discuss here today are going to be of my own, and as the name suggests, we will be carrying out the technical analysis of the euro against the US dollar, and of course Great British pound against US dollar. And after that we will also carry out the technical analysis of the other major pairs. I am saying technical analysis because we totally ignore the fundamentals. We don't talk about any fundamental aspects and we look at only the price action, that is the chart. And as a technical analyst, I know you already know that everything that is there in happening in political or fundamentally is already priced into the chart. So we will look at the charts only and see what are the future positions that we can take. Now in this program we will only be using the candlestick charts. We will try to find out the key levels for all pairs and we'll try to see how we can trade from them. If you are new to the technical analysis, I request you to go through our channel page and you can search for the playlist, which is profitable candlestick pattern and profitable chart patterns. They are done by me, very easy to understand, but after understanding it will give you an edge over the other traders so that you know how to trade candlesticks and the chart patterns. And now at the end of the session I will be taking the questions from the viewers, so I request you to keep your questions to be asked till the end of the session, or you can also write in the chat during the session, but I will be answering them at the end of the session. Last but not least, I request you that everything that I say in this webinar is only for information or the knowledge purpose. So please you do your own research before you put your money in the market or you put your hard-earned money on the line. So before taking any risk, please do your own research. Okay, with that said, we will go through the risk disclaimer quickly and then we will start with the chart of euro dollar. Okay, this is actually a risk disclaimer. Those who are trading on the foreign exchange on margin, of course, that is a high level of risk if you are trading on margin. So either you trade on less margin or no margin, that is a better idea, and you should never take a trade based on this video. You can actually do your own research then you do the trading. Okay, let us focus on what we are going to do today is euro dollar chart. First on your screen, if you have been following my channel, our channel and this program, so you might already be knowing that we have drawn these falling wedge and the weekly lines here on the chart. These are the weekly lines 1 and this is weekly line 2. The price is moving within this. Oh sorry, before I start, I just want to welcome my two daily viewers, that is MGA and Damien Schreier. Welcome to the stream, brother. Okay, so euro dollar here is trading between the weekly lines, although it has crossed above this falling wedge, which is a bullish price pattern. After falling out of this, or say after breaking out of it, price came back to test this region as the fresh support and then gave a bullish pin bar. This bullish pin bar here is a signal for us to go long in this pair with a small stop loss below the low of this candle here and take profit target, which is the next resistance. Right now it is at 1.1975 region. When I say region, it does not mean that it is 1.1975 exactly. It means that anywhere above 15 to 20 pips above or below the price can move. So if you are on the long side, where you would like to book your profits? Would you like if the price goes in your favor and then reverses from here? No. So idea is that as soon as you see the price is approaching 1.1975, you should look for booking the profits and wait for the next opportunity, there is a possibility that the price will break through it and then come back to retest this area as the fresh support, because it was the previous resistance. So when the price breaks our resistance and comes back to it, it ends to act as a fresh support. But you don't want to keep your positions held at 1.1975 with an anticipation that it will break, because there is a possibility that it will break, but the confirmation will only come when the daily candle closes above 1.1975. So better you book profits here and then look for another opportunity on the buy side if it breaks successfully and come back to this position to test it as a new support and starts making something like this, that is the bullish pin bar or the bullish engulfing candle like this here. I hope you understood my point. And if say the market reverses from here, because these areas were also the areas of resistance in the past, see, and now also it is looking like as if this area is giving the resistance to the market. You see, 1 2 3 4 5 6 7 8 9, so many times the price could not close above 1.1878 levels. So there is a possibility that the price will go down from here, just a possibility. Although I see that the higher high has already been made, the price will continue in the 1.1975 direction. But if for some reason the price starts falling, then 1.1840 is the first level of support, and this rising weekly line is a dynamic support for the price in the coming days. Okay, on the upside 1.1975 is the important level, and on the downside this rising weekly line is an important level to take care of. Let us see what is happening on 4-hour chart on euro dollar. Okay, although on the 4-hour also the structure of the market is still buy, but we need to see either a low lower than the 1.18515 or a high which is higher than 1.1908. Till the time the price does not break these two levels, we will be in a dilemma that where the price is going. So in that case, you may witness something of this sort, something like this forming here. There is a possibility that something like this will form and eventually the price will break to the upside. Now why I'm saying that the price will break to the upside, because this looks like a flag pattern, or you can say a pennant. Have you heard about pennant? I'll explain it to you because you don't seem like you have. Okay, this is how a pennant or a flag looks like, right? So sometimes what happens is that price, after taking a long leap higher, it tends to move like this in a pennant and then eventually break in the direction of the original trend. All right, friends, if that happen, it is called a flag and a pennant formation. So here this is what it looks like. It's a flag or pole and a pennant formation. There is a possibility that the price from here will break to the upside, and in this case if it happens, how we measure the target of this one, we measure the target as the height of the pole, which in this case is approximately from here 136 point, and it is measured from the place of breakout, which will be approximately this area. So 136 points from here will be at around 1.2022. I hope I have made myself clear in this regard. So I will just remove this and this, and I will keep it intact. So you got the idea. But to go to 1.2022, the price has to overcome this area of resistance, that is 1.1975. That is why I'm saying that you should target this region, because it was previous resistance. So there is a very high possibility that this area will also serve as a new resistance this time also. So you don't want to keep your positions in a problematic situation when the price goes here. So you want to book your profits before it bounces back from here to the area of your buying. So you don't want to regret after, you had a chance to book your profits but you did not do. This is what happens most of the time. Believe me, I have been through this a lot of time and I know this is what happens. And Damien and MGA, if it has happened with you, please let me know in the chat. I'll be very happy to know that you are also on the same side of this thing. Actually, this happens with the most of the traders, newbies in the beginning, but after burning your hands, you come to know that you should book your profits as soon as you hit a resistance, or before hitting a resistance, in fact. All right, now moving on to the Great Britain pound. Yesterday only we had seen that, yesterday means in the last session we had witnessed that the price is getting rejected at this range or this area of 61.8%. And also you see that yesterday the price has given a bearish pin bar as well as a bearish engulfing candle. Yesterday means the last session. I don't know why my charts are like this. Actually, these chart, I'm sorry, there is something wrong with my charts. They should be UTC charts. Oh, there is something wrong. I'm sorry for this. It should be UTC. Yeah, but still the same thing. So day before yesterday, it was, means last session. Yes, every possible thing happened to me. MG, nice. So this was a bearish engulfing. Now when a bearish engulfing candle comes on resistance, at resistance, it suggests that now a down move is possible. And also see how we have discussed that the market has changed its direction from upwards to the downwards, because the market has now started making lower low, and we are expecting a lower high to be formed here, and maybe this is what it is. But to be established this place as the lower high, actually to establish this as the lower high, we have to make a lower low than the 1.35 sorry 1. Yeah, 3572 levels this year. Till the time this is not broken to the downside, we will not be sure whether this was a lower high or not. All right, but it seems like it is already established. Otherwise the price has to go and close higher than this 1.4243 in order to establish the uptrend again. Why? Because in that case it will make a higher high, which will establish a higher an uptrend. So what we are expecting here is, we are expecting the price to move lower, and 1.3831 region, which is a small support in the past here in the multiple regions, and also it is 38.2% of this previous fall from all the way 1.4245 to the level of 1.3572. So we are expecting the price to move down lower and test this 1.3670 area as a support, and maybe even move further. I have already marked it, and go below this, and even even break this falling channel support line, and then come back to this level to test it as a new resistance. Or maybe if the sellers are very aggressive, now this is a speculative point, maybe the price will even move like this. So here comes a maybe, big maybe, how the price will go. Adolfo E. Peniagua: as a cautious trader, I would not take a trade until my risk to reward is at least 3:1. My friend, your it should not be, your risk to reward should be 3:1. Okay, your reward to risk is 3:1, right? Not risk to reward, but all right, sorry. So 1:3 should be your risk to reward ratio. That is what I am ascertaining or asserting so many times in this session. This is something which is actually the power of statistics, if you know. Adolfo, I want to talk about this topic a lot. if you do not open a trade as a cautious trader, as Adolfo has said, if you are so cautious that you do not open a trade until your risk to reward ratio is 1:3, then you will be a consistently profitable trader, because you have to be right only 3 times out of every 10 trades that you do to be a successful trader. Now here you see I am saying that here comes a bearish engulfing candle at the resistance, but say if we open a sell position right now, what is going to happen? If you open a sell position at 1.3899 or say 1.3900, we have a stop loss right above this area of resistance, which we have marked at 1.4001, because this is also a psychological handle. So if I open a sell position here, I will keep my stop loss around here at 110 points. So should I open the trade here or not? If Adolfo would be here, Adolfo, please let me know if I am wrong. If Adolfo would have been trading this, he will first check what is the possible targets. He will see, okay, here is the next support. What is the possibility of profit? Here is 225, but what is the risk involved? The risk involved is 110 points. So is it a good idea? I think he will not open a trade. What he wants to say here is that although it looks very good, it has a bearish engulfing candle at the resistance, but the idea is bad, because even if you open the trade and you win, you will get only 2 times of what you are risking. What you are risking is, you are risking 110 points, but you are going to get only 220 points. So that means you are risking half of what you are going to get. Now what his point is that you should be risking 1/3 of what you are going to get as a profit. So if on the other end, if the price goes back to this area again, and say we sell at around 1.3940, then our stop loss will be at around 67 points or say 70 points, and our take profit target will be here in this region, which is 250 to 260 points, which gives you more than 1:3 risk to reward ratio. So in that case, it will be a better idea to go and short this pair, but right now, not a great idea. Okay, on the other hand, there is another possibility. If you want to sell this pair right now but want to keep your stop loss above the high of this today's candle, which will be at around 34 to 35 pips, and you want to keep your take profit target here at 225, then it will be even a huge risk to reward ratio. But in this case, your trade will have very less breathing scenario. So if the market, because of some reason, tries to go back to this level of 1.400, then your trade will be, your stop loss trade will be triggered and you will be out of the market, and if there is a possibility after triggering it, the price will come back to this region, which is on the whole a wrong idea. I hope everybody understood what I wanted to say. Adolfo, am I right? So you should actually follow him and open a trade only if you see 1:3 risk to reward ratio or more than that. Okay, moving on to our next chart, we have New Zealand dollar. Here I said that we are bullish on this one. The price was making a descending triangle, then it broke out of this descending triangle, then the price came back again to test this area as the fresh support, and now the price is moving out of it again, but is facing some resistance at around this area of 0.6990. Why? Maybe because of this here, you see. Okay, maybe I will switch this to line chart for some time, and you will notice that this area has been an area of support in the past. This one here also, and this one here, it was a V-shaped recovery. Here 2 times it has acted as a support, and what do you expect? Don't you expect the price to get rejected here again? Let us see. So this was an area of interest in the past, so that is why this area is again acting as resistance for the price. But
I am expecting 0.7009 to act as a better area of resistance. Why? There are multiple reasons. If you draw a channel joining these lows and these highs, you will see that okay, sorry, not this one, but yes, see, this area has served as a good support and resistance for the price in the past. So one reason is that I am expecting this area to act as a good resistance. The second area is 7043 region. This one I am thinking that this will be even a better resistance. Why? Because the rising channels resistance here, second is this one here. So this is an area of interest from where I am expecting the price will shoot downwards. But does it mean that you should sell this pair? Does it mean that you should sell this pair here? No, it does not mean that you should sell this pair here, because this is in an uptrend. It has just broken out of this falling or descending triangle, and we are expecting the price to move actually to this region 0.7170. So we are actually expecting the price from here to come back to 0.700. This is a psychological handle, so we are expecting price to move something like this and this. So what we are expecting is, we are expecting to price to react here, give us some bullish pin bar or some bullish price action here in this region here, and then we will target 0.7104. And in that case, this is just my hypothetical view, it may or may not happen, but this is what happens most of the times. In that case, your stop loss will be around 10 to 20 pips, and your take profit will be almost 100 points. So this is almost 1:10, or say 1:8 risk to reward ratio. This is what I want to trade in my life or in my trading account. You should risk as less as possible, and you should gain as much as possible, but keeping the technicals in view. You don't want to open a trade here and keep your take profit here in the middle of nowhere. You should know where your key levels are, from where you can get the price rejected. So before the price gets rejected, you have to close your positions or minimize your risk, at least bring the a stop loss into the break even, or maybe to the buy side. I hope I have made myself clear. So for New Zealand dollar on the upside, 0.700, which is the psychological handle also, and after that 0.7043 is the next resistance. On the downside, we have New Zealand dollar, a lot of support at 0.6916 level, which is almost 60 pips down from here. Moving on to the US dollar against the Japanese yen. Yeah, on the bigger scenario, the price is trading in a channel which is rising, but if we come close, the price has been trading in a falling channel, has broken out of it, but right now is on the verge of entering that channel once again. To enter that channel again, price has to break below 109.06, but I don't think that it is going to happen today or tomorrow. Why? Because this is now approaching an area of support. It is a dual support, my friends. 109.06 here was then area of interest once, okay, and here it was an area of interest in the past. So this region is already a support region, plus it has another area of interest, because of this falling channel resistance line is also coming at this place, and this will now act as a confluence of support. Confluence is where you get a network of supports. What happened? Why it is not forming here? Why the ellipse is not being made? Okay, so this is now an area of interest. If you see something bullish price action here, I think it will be a good opportunity for you to go buy. But notice that how the price has just hit twice to the rising channel resistance line, and there is a possibility that the price is coming back to this region to take a support at around 104.23 regions. So you have to be very cautious when buying US dollar against the Japanese yen. Even if you buy here at 109 point approximately 10 or 9 regions, you have resistance very soon for the price to come, which is this channel, and 111.64, 111.53 to 55 levels. If you are a long-term trader, maybe you would like to see what happens at these two regions. If the price gets cleared off this region, maybe then you should look for a buying. Or if the price comes back all the way down to 107.47 or even below 104 point approximately 103.88 regions or here, then you should be looking for a buying opportunity. Buying at the current prices, it is actually very risky. It involves more risk than it involves the rewards, because if you sell here buy here, you see that how the buying or these green candles were rejected by this bearish price movement. That means the people are more favoring the sell of US dollar against the Japanese yen as compared to the buying, which is very small in number. And also you see, if the price falls to 107.47, there is no guarantee that this level, which is weekly upswing pivot, will hold. But if this is held, then the uptrend will be intact. But if this is broken, then all this scenario which we have created for the buy will break, because it is an upswing pivot. As soon as 107.47 breaks, the price will change its direction and will start moving downwards. So then we will be looking for a selling positions, but right now we are not looking for anything. Okay. And now you might be thinking that just now I said that we are looking for a buying positions here. This is only for the aggressive traders, those who can bear the risk of taking small trades for small profits here. Although this is the confluence of support, you can always take the risk here, but I am, because a very cautious like Adolfo, I will not open a position here. In fact, I will wait for the price to go below this, and wait for an opportunity to go for sell at this retest. Right now, if you see a bullish price action here, there is a possibility that you can go for a buy position. But seeing these two bearish candles on the previous 4 hours, I don't think it's a good idea. Okay, talking about the US dollar against the Canadian dollar, see, US dollar against Canadian dollar is rising. It is strong. That means the Canadian dollar is very weak as of now. It has broken below this rising channel, and now it is also moving in a channel while coming down, and is now trying to test the top of the channel's resistance, which is also in line with 38.2% of the previous rise. So are you expecting a resistance at this region? Because I'm expecting the price to get rejected here and then come back to 1.2364. But should I open a sell position now? No, because current candle is a bullish candle, and it has engulfed 1 2 3 4 5 6 for the 24 hours of price action. Previous 24 hours of price action it has engulfed, and it's a bullish engulfing candle. So you should not open a sell position right now. Maybe you can wait for another 4 hours and see what happens when the price goes to this region. Does it get rejected there? If yes, that will be a good idea to go short, because the price has already, you see, broken below this rising channel support, and now is only going to check something for it to act as a resistance. Okay, also notice that this support which is broken is also coinciding with this area of resistance. So 1.2528 region may act as a good resistance for the price in the coming time. But okay, if it breaks above, then this channel's support line will be acting as a good resistance for the price in coming time. And if that is taken out, then 23.6%, okay, leave it. This is not that important level, but 1.2646 level is an important level to take care of if the price starts rising from here. On the downside, we have 50%, that is 1.2405 of the previous rise. Here the 50% level is coming at 1.24055. It can offer some support to the price, because those who are following Fibonacci levels, they may try to open some long positions here, or otherwise we have this 1.2364, which is the previous support and the resistance level, and we have marked it on a chart in the price marker. So 1.2364 is the next level of support for the pair. You want to know if that is broken, then this okay, after this we have 1.2061 region. That is very deep. Okay, let's move on to the USD CHF. It is as of now it is moving as per the direction decided initially for the USD CHF, that is a symmetrical triangle. So yeah, nothing much to discuss about USD CHF. On the downside, we have this rising trend line that is there on the daily chart, and on the upside we have the recently broken support, which is sitting at 0.9051, and after that is 0.9135 region, and after that 0.9170 region as the resistance. Of course, this falling trend line will also be acting as a resistance, which is dynamic in nature for the price in the coming time. Okay, on the lower charts, it seems that the sellers are in control of the market. When the buyers tried to give some buy here, the sellers eventually came. Okay, here also you see there's this bullish, bearish engulfing candle right on the resistance has engulfed the price action of this 1, 2, 3, 4, 5, 6 was it 24 hours of trading. So expect some down move here in the USD CHF, and maybe you can look for the target of 0.8985 regions in this market. Talking about Euro GBP, it is taking support at the weekly rising line, weekly trend line, and I think that the price may be able to test the recent highs which are sitting at around 0.8670, and if that is broken, then the next high is here, which are at 0.8719, and of course this falling trend line may act as dynamic resistance for the price in the coming days. But right now, if you look for the downside, then the downside is limited, as this weekly line or the daily trend line, which is going to the top, will be supporting this price action. And even if that is broken, then we have 0.84723. This is a very important support for the price. You see how good it was behaving in the past. So I think this is going to be a very good support for the price now, today or tomorrow also, if the price breaks. And if that is broken, then 8.8277 will be exposed in this market. All right now it is in a buy zone with a small stop loss below this, but if it does not fulfill the criteria for 1:3 risk to reward ratio, then I think you should not open the position. So we have 52 points of risk here and approximately 116 points of take profit if you're targeting 0.8670. But if you're targeting this 0.8717, then it is a good risk to reward ratio. But you don't have to lie yourself. It is not a good risk to reward ratio, because the first resistance that you're going to meet is just twice as the risk that you have to take. You are bound to take that risk because the recent low was here. So I think it's not a good idea to open a buy position here. But if you can somehow because of some reason, if the price starts falling from here and goes back to 0.8523 region, that will be a good area for you to buy with the small stop loss of 25 points and take profit target of 145. But that you will never get, I think. I should not say that you will never get. I think you will not get it easily. Okay, and now I don't think that euro is going to go down from here against the pound. Talking I would not make that trade. No, yes, that is what Damon, that is what I just said. You should not be looking for a trade actually now, because you cannot do what is called gambling with your money, that okay, it will just cross this level. No, you should be sure about it, more sure than just be thinking or expecting something to happen. Yeah. Okay, talking about the gold here, gold has broken this short-term falling channel, and after break it immediately tested the resistance at 1834, got rejected, and now is trying to give us a bullish pin bar out of nowhere. Is it out of nowhere only, seriously, or we can make a channel joining the recent lows? Okay, so it is not nowhere, but it is at the channel support. So expect some up move here all the way to 1834, and maybe break that and go all the way up to this long line, which is sitting at around 1876 to 1877 zone. This is what I'm thinking. Oh, because the downside is limited, you are rightly very close to the 7095 support. Even if the price falls from this channel, rising channel, which we have drawn just now, the price will try to find some support at 7095 and may bounce back again for all the way down to 18 up to 1834. That is what I'm expecting in this market. talking about this in the 4 hour, you see how good the support is. This area is acting as a very good support for the price. As soon as now this high at around 1817.18 will be broken, and the price will go back to 1834 region to test it as the resistance, or maybe even break it and break higher. Yeah, possible. CHF this was a request yesterday from MGA, I guess. The resistance was broken. We were saying the price will come back to test it as a fresh support, and it has come, and after that it has made a higher high also. But right now the price seems like is going to break this low made here, but and in this case, if it breaks, then there's a possibility the price will keep falling. You see, if we draw a channel joining the lows, and if the price fails to keep this channel as the support, channel support at the support, then there is a possibility that the price will go all the way back to this region of 118.96, and maybe even this one here. Okay, sorry, this is of more importance here. You see how many times this area was respected. So 119.96 area may be coming soon. If it breaks below this okay, here is the support, actually not here, at 120.54. if it is broken, then we can see 119.96. all right, yeah, and it's from the bearishness of this current candle, it seems like it is certain that it will break, but only time will tell what will happen. Well guys, I'm open for questions if you have any, and if there is any asset that you want me to keep an eye on, or you want us to discuss right now, you can write that in the chat. And Adolfo, I welcome you wholeheartedly to this discussion. It is open. You can always ask your questions, or you can maybe share some facts about the markets. If they're technical in nature, we will be very happy about that, because we will not be able to discuss any fundamental or political aspects of anything. So guys, I expect that this is it, and we can just finish today's session. I hope you got some idea about the support and resistance levels that we are discussing, and just keep in mind, like I have already discussed, I cannot stress it more, to never to risk more than 1% of your capital on any single trade, and you should be looking for a potential profit of more than twice or maybe even thrice the risk that you're going to trade. So with this note, I shall end this webinar. Please press the like button if you find this video useful for you. You can leave your suggestions in the comment section, and consider subscribing to the channel for more such videos and webinars. Also, you can join the USJPY Forex community, where you'll find other traders and traders like me with whom you can discuss create ideas. Also, there's one Visual J Forex strategy thing. You can create your own strategies and execute them, implement them using the Java language. You should have a look at it. The links are there in the description. I wish you a very happy and a profitable day. Thank you for watching. Thanks MGA, thanks Damien, thanks Adolfo for joining me. Good day, peace.